Hello and welcome back to our channel. If you're new here, my name is Your Name, and today we're diving into a topic that every investor, whether you're just starting out or have been in the game for years, should consider: how often should you review your investments? It's easy to think that once you've put your money to work, you can just sit back and relax, right? But investing is more like tending a garden. If you want it to flourish, you need to check it regularly. So, how often should you really take a look at your investments? Is it once a year, once a month, or even more frequently? Let's break it down. First, let's lay the foundations. The frequency of your investment reviews largely depends on your investment strategy and your personal financial goals. There are some key factors to consider: the type of investments you have, market conditions, and your own financial objectives. For long-term investors, such as those saving for retirement, a quarterly or even semi-annual review might be sufficient. Why? Because long-term investments usually involve less volatility and are less affected by short-term market fluctuations. For example, if you invest in index funds or ETFs that track the overall market, their value can go up and down daily, but in the long term, they have shown to appreciate in value. On the other hand, if you're into short-term trading or investing in individual stocks, you might want to review your portfolio more frequently, perhaps weekly or even daily. This is because short-term investments can be very volatile, and staying updated can help you make quick decisions to capitalize on market movements or reduce losses. Next, let's talk about market conditions. In times of economic uncertainty or significant market changes, it's a good idea to review your investments more frequently. For example, during a recession or a major economic event, you might want to evaluate how your investments are performing and consider rebalancing your portfolio. Take 2020 as an example. The COVID-19 pandemic caused massive market fluctuations. Investors who actively monitored their portfolios during this time had the opportunity to make informed decisions, potentially buying undervalued stocks or reallocating their assets to more stable investments. Another important factor is your personal life. Major life events, like a new job, marriage, having a child, or even approaching retirement, can change your financial goals and risk tolerance. If any of these changes occur, it's prudent to conduct a thorough review of your investments to ensure they align with your new circumstances. For example, if you've just welcomed a new baby, you might want to adjust your investment strategy to prioritize stability and growth for your family's future, possibly increasing contributions to a college savings plan. So, how do you schedule your investment reviews? Here's a simple approach. Monthly reviews. Dedicate time each month to review your portfolio. Look at the performance of your investments and consider any news or trends that might affect them. In-depth quarterly analyses. Every quarter, conduct a more thorough analysis. This might involve examining your asset allocation, comparing your investments to benchmarks, and determining if any adjustments are needed. Annual reviews. Once a year, do a comprehensive review. Evaluate your overall financial goals, how your investments have performed, and whether your portfolio aligns with your risk tolerance. This is also a good time to consult with a financial advisor if you have one. To make your investment reviews more manageable, consider using tools and resources. There are many apps and platforms that allow you to track your investments in real time, providing insights and analysis that can help you make informed decisions. For example, platforms like Personal Capital or Mint can help you visualize your portfolio and track performance over time. In summary, the frequency of your investment reviews comes down to your strategy, market conditions, and personal circumstances. Whether you decide to review monthly, quarterly, or annually, staying engaged with your investments is crucial to achieving your financial goals. So, how often do you review your investments? Leave a comment below with your thoughts and experiences. And if you found this video helpful, don't forget to like, share, and subscribe for more investment and personal finance tips. Thanks for watching, and remember, a well-informed investor is a successful investor. Happy investing, and see you in the next video.